as always, let's take a look at what the Asian markets are doing. Largely mixed.
The government has proposed that the import restrictions may be introduced only in November.
The next downside level to watch is 44,370.
Jefferies has written a note on the same. They have a buy recommendation and a target price of 8,830 per share.
As part, the company said that this demand is based on gross bet value and not gross gaming value.
And today, they've gone ahead and told the exchanges that they intend to acquire another 5% stake.
5 lakhs. Our policies have grown about 15 to 17%.
The first stick on the Nifty is in the green.
We clearly need to come out of the recession narrative.
If you see very closely, 2019 onwards, majority of our investment has been on the third-party business development.
Going into December quarter, also we will see the festive demand.
Going back to, markets not doing well yet again.
In fact, there's an important press conference which NSE would be doing, giving clarification on this particular aspect today itself.
This indicate that MCX is set to go live on new technology platform being serviced by TCS on October 1.
For the markets, what a recovery that we have seen from the lows of the day.
Okay, it's been quiet and almost biding time for what we don't know yet, but has been the action so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC TV18 Motorola studios. I'm Prashant, Reema Surabhi here in the studios, and Nigel is joining in from the newsroom floor. Guys, hi. Good afternoon, and it's not looking decisive. Let's put it that way, either up or down. But one thing is very clear, guys, that at higher levels, on small bounces, there is very clear, visible selling pressure which is coming in. The market's not being able to sustain. 30, 40-point bounces, 50-point bounces have been sold. That's clear. Now, important, and this is the level we put out in the morning as well, the important level on the Nifty is 19,605. That is the 61.8% retracement. The final, you can look at the 78 as well, but this is the important one, 19,605. Is the retracement, the rise from the close of August to the 15th of September high. So that stands at about 19,605. Remember, at about 19,700 is where the 20-day moving average was. That was broken at close on Friday. That's the last trading session. For the Bank Nifty, it's a big candle once again. It's almost exactly a replica of what we saw on Friday. So very indecisive, on an intraday basis. So, like Friday, today, at least on an intraday basis, the Bank Nifty bounced above 44,778, which is the same 61.8% retracement of that same 15-day rally from the close of August to the 15th of September high. On Friday, they did that, but was not able to close above it. And today also is almost an exactly similar kind of picture because the index is flat after making a move on an intraday basis. So again, 44,778 on a closing basis, I think becomes relevant, has been relevant, which the market is not being able to hold on to. So will the last 60 minutes throw up something different? That's the question. Broader markets are doing a little better. I looked at the small cap index, the midcap index, maybe a little better as compared to what the Nifty or the Bank Nifty are doing. Reema.
The Nifty has given up some gains in the last one and a half hour. The Nifty high today was 19,734. From that level, we've given up close to about 75 to 80 points. So the Nifty is now down to levels of 19,650. But it's good to note, at least that 50-day moving average on the Nifty, we breached it, but we managed to climb back above that level. But there you have it. Starting about 150 to 230, we have seen a sharp slide in the markets. It's courtesy many of the banking names. Once again, HDFC Bank is struggling in trade. HDFC Bank was holding up in the green, but now has completely flattened out, as a result of which the Nifty Bank itself too is showing you a similar fall, starting about 150. Mid-caps, though, in that similar period of 2 to 230 are not falling as much. In fact, the Nifty mid-cap index has been moving up and up, and right now it's at the high point of the day. The advanced decline ratio is split right down the middle, but those lines have crisscrossed through the day.
Yeah, I'll tell you what, that this mid-cap rally, we've got green on the screen, which is good news for the bulls, but we don't have a roaring mid-cap rally as such. You don't have huge, high-flying momentum across, large range of stocks. I'll pick out, those are the advanced decline lines, they're crisscrossing, absolutely even-steven right now. I'll pick out some names. IRB, for instance, it's been strong from the morning, so it's worth pointing out. About 8-9% of an up move going on IRB. But it's an isolated move. Then if you try and pick some sectoral trends, then probably worth mentioning that railway stocks are seeing some action once again. Again, it's not much. It's not the 8, 9, 10% kind of moves that the market had gotten used to. Very sort of incremental 2-3%, RVNL, IRFC, Realty. These stocks are seeing some green, as is sugar. Sugar continues to be a dominant theme on the green side of the screen. So Renuka, of course, has some news around it as well. They've gone ahead and bought another sugar mill. But even Balrampur and the other stocks, Balrampur is actually doing very well, 7.5% up today. On the flip side, the stock of the day for all the wrong reasons has to be Delta Corp. There's been no respite given the uncertainty. Still, I think, down about 17 to 18%. It's been a nasty blow with that GST tax demand, which is totaling up to almost 17,000 crore rupees. That's a big hit for Delta Corp today. Nigel, what are you tracking?
Well, with 55 minutes to go, we have unmoved actually. Just take a look at the Nifty. Not even moved a single point as you'll toss to me. It's, absolutely unmoved. But the good news actually is that HDFC Bank at least has not moved down. It's struggling to hold on to the 200 DMA, but it's only 1.5% away from there. So the bulls will be hoping that it consolidates a little bit, maybe pulls back to around that 200 DMA, and maybe tries to make a bit of a move towards the 1,600 rupees. It did try earlier today, but that got sold into. So for me, HDFC Bank, that holds all the cards. And the Nifty Bank for the time being, that's up 120 points without the biggest constituent not moving too much. The question is, how do you position yourself in trade? Because it seems as of now, the broad range is 19,600 on the downside. If that level breaks, we'll see a sharper slide. While on the upside, 19,850, 19,900 seems to be a bit of a resistance zone. Mitesh Thakkar is back with us. Mitesh, what's your take in terms of index moves? Do you believe there's a fresh trade out here? Would you be daring enough to go ahead and buy the 19,600, or you'd rather sit it out and say, let you get better direction?
Good afternoon, Nigel. So my basic view is negative, and given the fact that we had a good decline last week and we are close to that 19,550 score zone, and we got a low of around 19,600 today, there is some chance of a pullback happening. So typically, I think if today I was to look at taking a fresh position, it will be a sell and rallies kind of a idea for me, and therefore the levels on the upside, one is about 19,750, 770 zone, and then there was this gap which happened on Thursday, which I think around 19,780, 800 zones, 19,880, 900 zones is the most ideal level to go short. So I think, maybe around 19,750, 770, if you can get a bounce back, buy into put options slowly for the next month expiry. And in case the pullback continues to about 19,850, 870, that's where I go and take aggressive short positions on the futures side with a 70, 80 point kind of a stop loss. Having said that, currently I have, one buy and one sell call. MCX is something which is showing very good traction on the short term and the long term charts. Today it's given a fresh breakout. So that's a buy with a stop at about 1845 for targets of 2000. And the one which looks weak to me is Sun Pharma. It's trading at the pivot average. So I want to see the stock start breaking below 1120. It's only 5-6 rupees away from here. So if it breaks 1120, take a short with a stop at 1140 for targets of 1075.
Okay, thank you very much for that. MCX is a stock that Mitesh mentioned. In fact, we've got an exclusive on that, a CNBC TV18 exclusive, where we learned from sources that MCX is all set to go live on a new platform. Sudarshan is here with details on this story. Sudarshan.
MCX stock has today hit 52-week high and gained up to 10%. As per exclusive information, sources indicate that MCX is set to go live on new technology platform being serviced by TCS on October 1. Last week, in its disclosure, MCX had indicated about going live on new platform by the month end. And for the same, MCX has been conducting mock sessions for almost a month now. And sources say these mock sessions have been almost glitch-free. Now, to go live on the new platform, MCX will need approval of SEBI and its board. Apart from this, MCX also has an agreement with 63 months to use its platform till December end. Now, in case MCX faces any technical glitch in the new platform, it can use the platform with 63 moons as a backup. Now, on the query of CNBC TV18 regarding going live on the new platform, MCX is yet to respond.
Okay, thank you very much for that. Gurmeet Chadha, Managing Partner, CIO at Complete Circle, is with us now. Gurmeet, we've been waiting for that, right? There's almost been a love and hate relation between 63 Moons and MCX. There have been letters which have been written on account of this delay. But finally, it looks like the dust has settled and MCX will go live with this TCS platform. Take it, for our viewers, can you tell us what is the big benefit for, MCX? Overhang is lifted, of course, but financially, how would this benefit?
So, I think, as you rightly mentioned, the overhang will go. We unfortunately do not have MCX in the portfolio, while it's not, part of our coverage as well. But in general, we are extremely constructive on the entire exchange business as well as depositories. We do have BSE in the coverage. We've seen a very stellar move in BSE. Also, they're trying to get some volumes back through the launches of various derivative contracts. One stock we do have is CDSL. It's been a little soft of late, but with very good revenue model. Transaction revenue will pick up as we see more IPOs, more volumes picking up. Their annuity business is pretty steady now, as well as the online KYC and other annuity charges. So pretty good play on a growing equity cult in the country. Very good ROEs, very good return ratios, very asset light, proper fintech model. So that's something we like. And NSE obviously on the unlisted side, which we recommend to our clients.
Okay, got that. Gurmeet, stay on. We have more questions coming up for you. The other stock that's been in focus, and actually it's been trading in the green for the better part of the day, is Strides Pharma. Higher as the company has received a USFDA approval for its cardiac drug, and it seems like a pretty important drug. Ekta is here with the details. Ekta, this is a big one for the company, right?
Well, yes, important news which has come in for Strides in terms of a drug approval. They've received the approval for a cardiac drug, Vascepa generic. The market size of this particular drug is around $1.38 billion. It will be manufactured at the company's Bangalore plant. The company says that it is another first cycle approval for the company, which means that there were no queries from the USFDA and no deficiencies in terms of this approval that they've received for this particular drug. Now, separately, Strides is in focus because the board will be meeting today to consider the restructuring proposal by the company. Now, remember in Q1 of FY24, in the earnings board meet, they had announced that the company has an intent to combine the CDMO interests of the group, and hence the board is going to consider that today and the nuances of it. There is also an analyst call which is scheduled at 5 p.m. this evening to discuss these details, and hence this stock would continue to be in focus in tomorrow's trading session.
Okay, got that. Thanks very much for that, Ekta. Gurmeet, let me take this up with you. Do you track Strides, and how would you view this development, your overall take on the stock?
Yeah, I mean, and the stock price tells you how the market looks at it. Also, I think the Q1 was slightly better. The product mix was better. A lot of cost optimization measures helped. The freight cost came down. Their margins almost were up by more than 800 basis points. So I think in general, we like this space. As I said earlier, we are more bullish on hospitals right now. I think that's something where we see there's a model has changed. There's better capital allocation happening. Valuations again are rich there as well. So if you see Max, they're very focused on Delhi, Mumbai, largely the top two metros. Apollo has got its strategy right after doing a very expensive outreach some time back. And Nana Hridayalaya is more happy with tier 2, tier 3. And then we have a specialty pair like Rainbow, which is child pediatric care. So we have 32 crore people which are 50 plus. And we have the diabetes capital of the world. So I think healthcare services will see probably more names also coming in this space and more market cap getting added. The prices have run up slightly ahead on good news. And as I said, this is more a capex play on pharma side, right? So they're getting the metrics right with SLI models now. So we like this space, and any dip I think is a good opportunity to add.
Hi Gurmeet, good afternoon. Good to have you in the show after a while. Gurmeet, there was a DAM Capital note that came in earlier today, and they are talking about South India, the cement companies. They have been struggling, but they believe their time has come now because, pricing hasn't been in their favor. You have input costs as well that have spiked up. How are you all playing the cement theme, and what do you like?
Nigel, extremely constructive. I think I started my career with the cement company. So I'm seeing 11-12% volume growth in cement after a long time, almost a decade. South, I agree, there is a bit of overcapacity, but we like some players like Sagar Cement, one of the lowest cost producers, the right mix between OPC and PPC, almost 50-50, available at about 220, 230, it's at probably $50 a ton, which is much below replacement cost. That's about $75-80 is the cost of setting up a new cement capacity right now. We saw Ambuja acquiring Sanghi at almost $100 at a valuation. So I think valuation comfort there, below replacement cost, one of the low cost producers, and the larger ones like Ultratech. I think they have the balance sheet to expand. And once the volume growth comes, you see a lot of good operating leverage playing out, which the sector hasn't seen for a while. So the results would surprise, obviously helped by a bit of softening in input costs as well.
Okay, all right. Gurmeet, stay with us. We're just coming back to you. We'll take a quick commercial break. Our first on the show, we're at about 19,657, so nothing very much, 17, 18 points lower. We'll also have Ronak Onkar of PPFAS Mutual Fund on the other side to talk about their views. HDFC Bank is a big holding for them, so we'll talk about that as well in a bit from now. Stay with us.
Welcome back. The stock of the day on the way down is Delta Corp. It's the big loser, 20% lower after it got a GST demand notice for nearly 17,000 crore rupees. Not just that, today we also saw a pretty large block deal. 1.7 crore shares worth 240 crore rupees changed hands. Mangalam is here with the news. Mangalam.
Well, as far as Delta Corp is concerned, business like these always have the overhang of some sort of regulatory action, and we've seen more of that in just the last 3 months. The first was the GST Council meeting, the outcome of that impacting the stock. And now this, where the company has told exchanges that they have received GST notices worth nearly 17,000 crores, 16,823 crores to be precise. And in that as well, 11,140 crores have been directed towards Delta Corp, and the remaining have been directed towards 3 subsidiaries for the company. And now this is for a period of July 2017 to about March 2022 itself. On its part, the company said that the GST demand is based on cross bet value and not cross gaming value. So there is some discrepancy there, and that's not all. This notice and the tax demands are arbitrary and contrary to the law as per the company. And for that, they've announced that they will pursue all legal remedies available to them to challenge these tax demands itself. The stock has fallen about 50% from its peak, including today's down move as well. And it was in F&O bands. So, there was a lot of impact cost on trading in F&O as well on account of that. However, despite this down move that we saw, there were a bunch of large trades that took place. Nearly 6.3% equity changed hands today. So it'll be very, very interesting to see who the participants of that deal would be. From the sell side, not so much, but the buy side would be the one who would absorb 6% of Delta Corp when it's down 50% from its 52-week high.
You said it, Mangalam. That's exactly the question on my end. I think everybody's mind as well, given the uncertainties and this complete change in law. And remember, the GST law was amended, so for online gaming, real money gaming, and for casinos, the going has gotten tougher with respect to tax. So thank you for that. We'll watch out for the identity of the buyer later in the evening. But Gurmeet...
Surabhi, just one thing. We spoke with, we had Pratik Jain, the tax expert with us on Trading Hour. And he said there's, of course, good arguments to be made by the company, etc. But in his assessment, eventually this will go all the way to the Supreme Court. And it will take, a few years till the issue is actually resolved. We've seen this with past demands as well, with companies challenge, etc. The most famous, of course, being the Vodafone one. So it could take a number of years and perhaps heads all the way to the top.
We must also remember that the bearing of the very famous Gamescraft case, which is where the real money online gaming versus Government of India debate really kind of rose into national headlines. The company Gamescraft won in the Karnataka High Court. The matter has reached the apex court now, and it's still pending. So the outcome of that case, I think, proceedings are ongoing. I'm not sure if that demand has been quashed, because even there, the demand was 11,000 crore rupees plus. Very similar to what's happening with Delta right now.
At the Karnataka High Court, they deduced that this is a game of skill and not chance.
But that doesn't matter. It's in the apex court. Like
it's gone to the
saying.
apex court now.
This is the point I was making earlier as well, but not particular to this case, actually not. But when you put a big number like this, right, and you say, well, this is what the Government of India, the Exchequer, is owed, then to go back from it, it's you immediately, fingers are pointed and saying that why are you letting this revenue to go? This is revenue owed. Merits of the case be, they become secondary, right? Because you put that large number, so it's very difficult to back off in that sense. So this will have to be settled by the court, because the authority, it's very unlikely that they'll...
and for future, the law has anyway been amended. The GST amendment came in. It's 28% flat. Online gaming, real money gaming, casinos, all of that. This is right now
on the chips that you buy, not on the service that...
on the entire face value of the money that you're putting up for playing that particular sort of game. But let's bring in Gurmeet on this. Gurmeet, so you've heard Mangalam, you've heard us. I think this has been really on the market's mind for the last couple of months. No one has wanted to touch Delta, apart from the buyers today in the blocks, and we'll find out who they are. But your thoughts, would you consider being a brave heart and venturing out with a buy at all, or is it a stay away?
No, not as of now. I think at probably some point of time, the valuation will become, become very, very cheap. But, this as Prashant said, this will be a long legal battle. And this is the risk with sin stocks, which is liquor, ITC, gaming. I think that regulation, intervention, tax demands are always the risk We do track two stocks. One of them I like for ages is ITC. The other one we track is United Spirits. So in fact, Q1 was very good for them. They almost sold 11 million cases. The product mix is now, if you see prestige and above is more than 80%. So product mix is right. But their popular segment saw a fall in volume, especially led by Karnataka imposing 20% tax on the lower liquor brand. So that's always a risk you run with. But there's a change of management. The company has a right strategy of innovation and premiumization. So that's something we like if we get more reasonable valuation amongst the all and of course ITC.
Okay, Gurmeet, we'll leave it there. Pleasure speaking with you as always. Thanks very much for your time here on CNBC TV18. Just an alert at the bottom of the screen. SRIRAM Finance is perked up quite nicely. And this is a name which has done well and it continues to do well. Lots of it's cheap. I mean, compared to most other players operating in the same commercial vehicle financing space, or even actually compared to other NBFCs, it's one of the larger ones, actually within the top 3 in that space in terms of market capitalization, AUM, etc. But it's also one of the cheaper of the lot. So 2.5% higher on SRIRAM Finance. Ronak Honkar is with us of PPFAS Mutual Fund. Ronak, good to have you with us here. Good afternoon. Thanks for your time. Just start with your thoughts, Ronak, on HDFC Bank. I was reading a note from Suresh Ganpati Macquarie, and he began his note by saying that I spend half my time nowadays discussing HDFC Bank with clients, and it's very heated. Used to be a one-way view, not anymore. It's a large portion of your portfolio. Talk to us about, why you hold we know why you'd bet on the name, but just, the doubts that people are having and your justification to that with regards to HDFC Bank. Go on.
Thank you, Prashant, for inviting me. HDFC Bank does have these polar views nowadays, but interestingly, if you see, as the group has now merged, a lot of the things which HDFC Limited could do, the bank cannot do. So some of the overhang of that will definitely be there. A lot of the statutory limits that they have to maintain in terms of deposits and reserves, they will have to shore up those over a period of time, and that will happen as the business continues to go. The other thing that is positive for the group is that the reach of HDFC Bank is far greater than what the Limited could do. Some of the business which otherwise couldn't have been approached through Limited, the holding companies, now can be done very easily through HDFC Bank. And they're also expanding their reach, trying to reach out new customers. Again, if you look at private sector banks as a whole, these are very good consumer franchises. They will have fee-based incomes as well as the lending business that they run. I think we cannot discount short-term perturbs in the market right now, but we have to keep a watch as to how the business performs, how the growth comes in. That's the biggest question right now. Where will the growth come from?
Ronak, Bajaj Finance doesn't make it to one of your big holdings. Most of the fund managers that we speak to include Bajaj Finance in their portfolio. Can you tell us why you've kept away from Bajaj Finance? And would you now consider looking at it? They have got some fundraising plans. So any thoughts on that?
We are actually exposed to the Bajaj financial subsidiaries through the holding companies. So we own Bajaj Holdings as a large part of the FlexiCap and tax saver funds. And we own a little bit of Maharashtra Scooters as well. So we decided to buy the holding companies, which will give us the underlying for a discount.
Okay, all right. Hi, Ronak. Ronak, I as well had put out a piece on this Bajaj Holding and Maharashtra Scooters, indirect way of playing the Bajaj twins. What do you think is a decent discount to give these companies? Because there as well, you have the street that's totally split out there.
Yeah, there's a very wide range, Nigel. So the discount has ranged from 70% is now close to 50%, and it keeps fluctuating. There is no fixed answer to that. If you look at global holding companies, the discount is as narrow as 1%, 2% in many cases. It's just an anomaly of our market where discount numbers can vary quite widely and opinions can also vary widely.
Okay, all right. Ronak, I think, as of the last reported number, you're sitting on cash, is approximately what? 12, 13%?
13, 14%. Yeah, 13.5%.
No plans to deploy it? You'll want to sit on cash? Do you think that with the kind of headwinds that we have and post the recent run-up, cash could be a position as well?
So we hold cash as a residual value. So tomorrow, if we like a good company which can easily absorb, say, 5% of the fund, the cash levels will go down. So the cash itself becomes a residual value. It creates an optionality for us to deploy when valuations are attractive. But at the moment, we aren't finding very attractive valuations in companies we like. So we sit on the sideline, we keep tracking them, we study these businesses. And the moment when these valuations seem attractive, the cash is available to deploy. But we are not in a hurry to deploy money and just chase the momentum that is there right now.
Okay, not in a hurry to chase momentum. Ronak, hi, good afternoon. I was looking through the holdings in the FlexiCap fund, and a couple of interesting PSU names crop up, but I'm sure they work very well for your portfolio. There's Power Grid, there's Coal India, there's also NMDC. So just tell us what you're thinking right now, because this is, I think, one of the biggest burning debates in the market. There's a small section of people who are beginning to say that PSU rally has run way ahead of itself, and these stocks will also start correcting, perhaps soon enough. What do you think, given that you're an owner of some of these companies?
Thanks, Urbi. No outlook on the price as such. We don't know when the prices will correct or go up. But interestingly, in some of the PSUs, which are very well managed, they have some resource advantage, they have some uniqueness to their structure, and some of them are also managed very well. So we try and filter these kind of PSUs. The three you mentioned, Coal India, Power Grid, and NMDC. NMDC was a special situation regarding the steel plant being demerged. But in Coal India, there is a long-term tailwind of thermal power in our country, which is needed. And I think that is one of the sole suppliers for thermal power in our country. So it remains to benefit as they become more efficient. It can also generate higher profits over a period of time. But again, it's not a company where you can compound consistently over a long period of time. It will have its own cyclical elements to it. And we have to understand those cyclical elements also before we pay for these companies. And with Power Grid, the same story applies. It's basically, it gets paid on availability of power. So as long as we have demand, as long as the grid keeps expanding, it makes sense to have a company like Power Grid expand its grid and also revenues over a period of time. These may sound very simplistic, but we actually paid, I think, reasonable valuations when we are buying them. So we may not be buyers at any price. We were buyers at a very reasonable price in the past.
Yeah, I know. That's why your shareholders would be, or your investors would be extremely happy with the returns that have been generated. Since we're discussing power and you sound quite convinced about the theme, would you look at adding positions? And if yes, and in which part of the chain? I mean, look at what's happening to some of the companies that are into smart meters. Right, we've seen those stocks completely burst through the roof, literally. Then there's green transition. So how would you play power beyond some of the names that you already own? You also have IEX, by the way, which has a certain regulatory overhang as well. We don't know if it will remain the advantageous sole power exchange of the country or not. That's a separate matter. But what else in power?
You would love to own simple businesses. What is resources? Then something which has some sort of a market dynamics or something that has a network effect attached to it. Some of these we already own. So beyond that, all these can be narratives. We have to track all these narratives carefully and see how the numbers actually come up in the future. And if at all in the future the numbers are sustainable and the business models also prove themselves, then we might look at these companies. It can mean industrial goods, it can mean smart meters. All these companies are worth tracking over a period of time. But I think when the narrative is too positive, it's better to just make sure that the valuations don't go ahead of themselves.
Hard assets, simple businesses. Ronak, did you give a look to JSW infrastructure? It's not every day that a port company comes to the market, and this is a large one, the second largest in the country. Any thoughts?
I don't have a view on that, although we track ports and logistics as a whole, but don't have a meaningful view on this right now.
Okay. Do you own anything in that space?
No, we don't.
Okay. All right. Fair enough. Anything else, Ronak, in terms of, single stock, idiosyncratic kind of opportunities, anything you've bought recently? I know you're sitting on a large, not a large, but a substantial amount of cash, but have you done anything?
So no new additions in the portfolio as such. We have been buying wherever valuations are reasonable in the stocks we already like and already own. So that's the portfolio over a period of time. Anyway, we don't churn the portfolio a lot, so you won't find too many new names coming in, going out. But our views are more or less the same over a period of time. Find reasonable price companies which we like over long term.
So more banks and more IT. That's the...
We do own IT in the portfolio, substantial bits of IT in the portfolio, both in FlexiCap and TaxSaver. And that remains a very interesting yet cyclical business over a long period of time, has generated consistent returns, is debt-free, has managed to have cash flow positive businesses over a long decades period of time. I think we love that business, but over there we are very picky when it comes to large cap IT companies. We used to own some mid caps in the past, but valuations have caught up quite a bit in the mid cap and other smaller space in IT. The larger companies do have some reasonable valuations right now, but yeah, even there the valuations have caught up since the last year or so. So it remains to be seen where we can deploy in IT services as well going ahead.
Got it. All right. Thanks a lot, Ronak, for stopping by and filling us in with your take on the markets. You're sitting on some cash as well, in no hurry to deploy, and you're keeping the faith with HDFC Bank. And some of those, so-called anti-ESG themes actually have moved very, very well. Coal India, ITC, people were scared. You all got in at the right time, and it's done well for your portfolio as well. Well, time to move on then and focus on D-Street Chatter. Nimesh joins us to get us an insight into how he's reading today's action. Hi, Nimesh. What are you picking up?
Hi Nigel, busy day in the conference as well, but overall from a market's point of view, I guess it's pretty much lackluster, and I guess market leads lacks some bit of triggers as well. So that's the overall feedback. I guess from an overall flow point of view, again it's a mixed flow, but with a negative bias, and that negative bias is largely towards the large cap names. And within large cap names, while it may not show up on the stocks, but there are negative flows in the overall private bank stocks. That's the broad feedback as far as flows are concerned. I guess because of the expiry, you're going to see the volatility for the next few days. But for the expiry week, the overall the feedback is that maybe the Nifty could range between 19,300 to 19,700 levels. So it could be in that 400-500 points range. But the other sector which is seeing some bit of traction back is the NBFCs. We saw a surprise fundraising from Bajaj Finance, and that's reacting to today's trade. I guess the Chola QIP is pretty much around the corner. That can come very soon. So the NBFC space is doing good, and there is an anticipation that further fundraisings could happen in that space. So that's one space which is buzzing in today's trade as well. But overall, I guess because of the expiry week, expect some volatility. But from today's perspective, there are negative flows, and that's largely towards the private bank teams.
All right, negative flows in there yet again. But Nimesh, individual stocks, there are plenty of news that you would be working on. So run us through a few of them.
Sure, Nigel. So the first stock on my list today is Natco Pharma. Within the pharma name, this is one stock which is consolidating at these levels, but I understand one nominally fund is an active buyer and accumulating at these levels in Natco Pharma. So that's the reason why the delivery volumes have been quite high for the last many days, and that's the case today as well. So that's the first one. The second stock is NTPC. Within the power names, this is one stock which is well bid by large institutions. So again, in today's trade, there are strong buy flows, and I understand the delivery volumes are going to be quite high again in today's trade in NTPC. So that's the second one. Third, largely on sell flows, there are two stocks. One is Hindalco, which is down in today's trade, largely on the back of sell flows. But even Jubilant Foods, well, the stock is up 2%. Last one I checked, but there are sell flows and delivery-based selling in both these names from larger FI. So that's the overall feedback on these two names. And the last one is IRB Infra. Within the mid-cap and small-cap space, this every now and then you'll hear one or two stocks which are buzzing into it on large buy flows at an HNI desk. A lot of HNI names get added to those stocks. But again, it looks like more of a rumor, but large buy flows in IRB Infra, and hence that stock is also buzzing into it today.
Okay, thank you very much for that, Nimesh. Get into a break. On the other side, we'll get you what you can buy today, sell tomorrow. Calls from our technical experts. Stay tuned.
Welcome back. Well, the market continues to stay around the flat line. Nifty is about 6 points up. That's it. Very, very choppy, but in that band. Let's get you some other news. And this is important news coming in on Baiju's. Recent irregularities and delay in financial reporting by the edtech firm has led the Ministry of Corporate Affairs to consider more stringent regulations for bigger unlisted companies. The ministry has ordered an inspection of governance lapses at Baiju's, and that inspection is still on. Here's what the government is considering to prevent such governance issues in the future. Shivani has the details.
Well, yes, the Company Law Committee, which is the CLC, is discussing the possibility of bringing in rigorous and higher level of regulation for bigger unlisted companies. According to MCA sources, the committee could also consider defining bigger companies in terms of size and turnover. The committee is considering higher levels of regulation for financial reporting for such bigger unlisted companies, including mature startups. Among the regulations that may be brought for such companies is the mandatory submission of quarterly financial statements by these bigger unlisted companies. Sources suggest that this move is triggered by the recent case of irregularities at the edtech startup Baiju's. Recently, former SEBI chair Ajay Tyagi had also asked MCA for a review of corporate governance compliance of mature startups. The tenure of CLC, which was formed in 2019 by the Ministry of Corporate Affairs, has been extended by a year now to look at multiple such issues. Currently, the Companies Act amendment is under interministerial discussions.
For that, Shivani. Well, let's get back to the market action. Mitesh Thakkar is back with us. Mitesh, what are the trades you have today for a reverse trade tomorrow or post that?
I think like Sun TV is something, which gave a correction after hitting highs of 622 and then came down to as low as about 585, 590 is reversing. So that's the BTST with a stop at 595. And I would look at a target of around 615. And Tata Consumer is also closing with strength. So that's a BTST with a stop at about 889 for targets of 910.
Mitesh, by the way, this extended trading hours, I'm sure you saw the the news flow. Ready to trade? Contracts between 6 and 9 p.m.?
Not really, Prashant. I think that will be a very taxing affair in case it does go through. Because, in reality, I think it's impossible to spend so many hours sitting in front of the screen. It's not good for mental health, and I have so many issues with that kind of proposal. I'm not sure whether, whether it will happen or not. But if it does happen, it'll be, to me, it'll be a very negative kind of thing.
Hearing Mitesh, I think what he's saying has been the voice of so many brokers and traders who've been there in the market for a long time. But Prashant, I guess with the advent of new age computer-driven algorithmic trading, I don't know. I mean, whether these human cries will be heard anymore.
Algos don't get tired. Anyway, well, NSE's Chief Business Development Officer, SRIRAM Krishnan, is clearly saying, told my colleague Yash Jain that a proposal to not increase, but actually have a second session. That is, the market shuts at 3:30 and then another session between 6 and 9 p.m. That proposal has been sent to the market regulator, which is SEBI. This is only for the futures and options segment. Listen in to some of what he told my colleague Yash.
This is something that's come out after a lot of discussions on this subject over the last 9 months. We set up a working committee towards the end of December last year. Actually, there is a bit of hesitancy when it comes to extension of trading hours for cash equities. But on equity derivatives, there was a large consensus which has come about, stating that we should certainly do a session in the evening as a small start. And this is the right thing to do. For us, it's important to do the right thing. And although we have an enabling provision to go all the way up to 11:55 p.m., we felt that after all these discussions, we should put together a proposal and submit it to the regulators for their approval. The session would be from 6 p.m. to 9 p.m. to start with, and the products that we will offer during this time is only index options and futures, and not single stock options and futures. And the way in which we can possibly take this forward is by either extending the timeline from, let's say, 9 p.m. to maybe 11:55 p.m. That's one option. Or we could also add more products during the 6 to 9 p.m. session.
Stock futures could be a possibility, then eventually, of course.
Possible. So we could do either of these two options. Again, we will obviously consult the stakeholders. Well, there are two schools of thought. One, which is that there needs to be an opportunity for an investor to hedge the portfolio risk. The other, which is obviously that investors are now getting carried away and it's becoming more of a speculative activity than just the hedging of the portfolio risk. I cannot, authentically tell you that all the activity in the F&O space today is pure hedging. It's not. And we all know that. And everyone is concerned about the massive surge in the options trading volumes. And therefore, we are running massive campaigns and initiatives to get the investors to become more aware and to understand the downside risks.
All right, well, interesting. Anand Tandon joins us as well. Anand, what do you make of this piece of news? Personally, I like to cover markets, but I like to do it only in daylights. Once the floodlights come on, I don't think I want to be part of it. What's your view?
Well, as the gentleman was just saying, it's the right thing to do. It depends on what is right and for whom. It's like Canada saying the right thing to do for India is to help them find their terrorists, those who killed their terrorists, whereas we say that the right thing to do would be for them not to promote the terrorists in the first place. So it's really a matter of perspective for people looking to actively participate in the market. Extended trading hours means essentially if you are really a day trader, you won't be really able to sleep at all. I don't know how much value add there would be other than perhaps creating a hedging position. So if you were to allow Nifty trades, for example, to happen around the clock, maybe that there is still some argument to be made for that. For the rest of it, by keeping derivatives open and not leaving cash open, actually you are creating an arbitrage again in the beginning of the day whenever the cash starts. So that will complicate things further. But, we'll have to see however it pans out.
Anand, afternoon. Today is the last day to participate in the L&T buyback. The buyback price is 3,200 crore. Would you suggest that?
Well, that remains one of the few companies in the entire sector which is relatively less expensive and where the order book looks very good. So from that point of view, you have to keep it in your portfolio. If you exit that, what will you buy? There aren't that many options in terms of capital good players which are leveraged to the kind of current construction boom that's happening to be able to play that sector. So you may want to participate, but at the same time, like I said, there is very little else that you can buy in that sector.
Okay, that's a view on L&T. Anand, hi, good afternoon. Wanted your thoughts on this move by the Burmans with them buying more stake in Religare, and now there's an open offer that'll be triggered. Even the pricing was interesting. It was a little lower than the current market price. But again, this is another business group which has its eyes set on the financial services business. It seems everyone wants to have a pie in that game. What's your sense on this? We're also seeing, simultaneously Bajaj Finance, for instance, looking to raise more money to expand their business. Your thoughts on some of these big financial sector developments today?
So I think people have a mistaken notion that it's very easy to set up a finance or an NBFC company. It does appear easy. All you do is raise some money and then go distribute it. The only problem is they forget that it's not that easy to get it back. A classic case, for example, is Mahindra & Mahindra, where despite being in the industry for such a long time, they are unable to get their timing right in terms of when they should expand their portfolio for financing their own vehicles and when they should not. And as a consequence, they tend to drag, whatever their peer group in terms of being able to recover. We have seen that happening in infrastructure sector in some of the companies in the East. So, it's and consumers finally have a limit to how much they can leverage. Already we have a situation where the Indian consumer is now fairly heavily leveraged in terms of the fact that, the financial savings rate are the lowest they have been historically. And while we may celebrate saying that, that means their credit culture is in, I'm not necessarily sure that that's a great thing for an emerging market or a developing economy where savings are not adequate. And all that we are looking at is preponing consumption. So net, it's a difficult market. Most people who get into it don't understand why they're getting into it other than the fact that they have the money to spend. And therefore, I'm a little skeptical of people getting into businesses which are not even adjacent to what they're trying to do. I think the Burmans have enough on their plate in terms of being able to create marquee name for themselves in terms of FMCG, etc. And they would be better, focused. They would use their money better if they were to just focus on that.
Although, to be sure, yes, you're right, Religate does have an NBFC arm as well, and perhaps that gets ramped up with a sort of, strong promoter coming in. But I think the majority of the value of Religate is derived from the care insurance business, which is the insurance subsidiary. And I think so far, but yes, I mean, they have an NBFC business as well, which surely the big money, of course, is on the lending side. When I say big, I mean it's more attractive. Of course, provided you're able to conduct it as Anand said, in a profitable way over a long period of time, which is easier said than done. 251 on Religate. We'll take a quick commercial break here. We'll come back. The market's not running away in either direction. We are back with the last 10 or 15 minutes of trade. Stay with us. Okay, welcome back. It's going to basically be a day where it'll be a little changed by the end of it. 4 or 5 points here and there is what we have. Any thoughts, Anand? Have you looked at what's happening in some of these sugar names? Going into the election season, one would have thought that at least on the sugar side, ethanol is different, but on the sugar side, maybe things would be a little under pressure in expectation that perhaps the government would be tight-fisted, not allowing sugar prices to rise, etc. But stocks are doing very well. Any thoughts?
Well, yeah, I mean, there is actually a shortage globally. And of course, while India is not exporting right now, it will, in some form or shape, react to what the prices are around the world. And importantly, right now, we don't see that kind of pressure in terms of giving money to the agriculturalist at a higher price while keeping the prices under control. So there is ethanol, of course, is a big factor, as you mentioned, while it is not immediately the question that you are asking, but that has stabilized the earnings from sugar quite dramatically. So that combined with high prices, there is at least some justification for the stocks to be where they are.
By the way, the last 30 minutes belong to real estate companies. So Parsvana Developers is up 20%, but even the bigger ones, Sobha up 5%, Godrej Properties up 3.5%, Macrotech Developers up 3.1%, DLF has gained 1%, Ajmera, Oberoi Realty, Purvankara, Brigade, Prestige, across the board, you are seeing that sharp rally coming through in the last 10-15 minutes. Anand, do you like real estate? The argument that's been made for the last few quarters has been that real estate has gone through a very long period of downturn. The cycle has turned and it's likely to last for some more. But it's played out for the last 2 years now. How much more from here for real estate companies?
Yeah, I mean, I think you're right. The cycle has played out quite considerably. And while, we used to think about cycles lasting for a long time, like the markets now, I think most commodities, most markets have actually shrunk in terms of the play out of the cycle time wise. Of course, the good thing is that the inventory for most of these builders have come down because of the sales that has happened. We had fairly long inventory tails that most of the builders were carrying. So now you will expect them to continue to build till the inventory picks up again. So for the near term, at least, it would appear like their performance is quite good. The question really to ask is when will the consumer stop buying and when will the investors start, speculating? And that's the danger. I think we are still some distance away from that. More importantly, the price rise has been fairly substantial in most markets in terms of the product. And therefore, it is still a question of not so much of investments as the fact that the end consumer has been buying. And that is good news. So maybe a few more quarters. From the point of view of stock markets, I think, it may be a good time to start actually easing off now. Of course, it's not the time to be selling real estate because, as I said, the earnings will probably take at least another 6 months before they peak out. But it is certainly time to be more cautious given the price upswing that we've seen in real estate. Not so much the stock, but actual real estate values in most cities.
Okay, all right, Anand, we'll leave it there. Thank you very much for your time. Great speaking with you here on CNBC TV18 as always. Good to get that perspective. Well, it's basically like a traffic signal, blinking red and green, that flat. So 19,672 on the Nifty. The day's low is exactly the level that we put out in the morning, which is 19,605. I mean, actually, the day's low today is 19,601.5. So, yeah, almost exactly there. And then a bit of a bounce, but kind of unresolved. When we close on the Nifty exactly in the middle of the day's range. Bank Nifty price action today, very similar to what we saw on Friday, which is intraday came up above an important level, which is that 61.8% retracement. But failed to close above it. But still, better the two indices like what we saw on Friday. Bank Nifty ended flat, whereas the Nifty saw some pressure on Friday. And today is, similar, although the Nifty did come up from the lows. Rima.
Well, Bajaj Finance is the top Nifty gainer, 4.5% higher ahead of its plans to raise money. Bajaj Finserv giving it company. Other notable movers include ICICI Bank, up 0.5%, Tata Consumer, Apollo Hospitals, smart moves there. On the losing side, Hindalco, SBI Life, a couple of IT names like Infy and Wipro lost ground, and MotoCorp ends with a cut of 1.5%.
Okay, very quickly, midcaps did better than the frontliners. Gainers included a lot of sugar stocks, whether it's Balrampur or something like a Sri Renuka or a Dalmia Bharat, which was up about 7%. So good moves in sugar. And railway stocks rolling along once again. Check out IRCTC, about 4%, RVNL, IRFC. These were some of the other noticeable movers and shakers on the way up. And IRB Infra, of course, big move on this stock today, about 9% on the upside. Of course, Delta Corp will stand out as one of the weakest stocks today because of the GST tax demand notice, 17% down at count. And finally, Religare, not reacting too well to the news of an open offer being triggered by the purchase of additional stake by the Burman family. They've bought stake at a price lower than where the stock was today, and maybe that was the reason behind some disappointment, 7% down over there. With that, the bell has gone. The market has ended virtually flat, unchanged with the Nifty at 19,675. It's time for the closing bell team to wrap up, but don't go anywhere. In fact, Shireen is in conversation with Sanjeev Puri, Managing Director of ITC. So let's cut across for that.